Hello and welcome to yet another edition of CNBC Africa's monthly debates today. We will be discussing the state of East Africa's energy matrix. According to the International Energy Agency, Sub-Saharan Africa is rich in energy resources, but very poor in energy supply. It goes on to note that while we constitute 13% of the world's population, we account for only 4% of energy output, and roughly a third of us have access to power. And yet, East Africa has everything: hydro, wind, biomass, solar, geothermal, peat, and even fossil fuels. And the question remains, how do we tap into the region's mass? We are joined by a very esteemed panel. On my left, we do have Ambassador Dr. Kipyego. Many thanks for joining us. We do have Benjamin Mugisha, underwriter at Africa Trade Insurance Agency. Sam Dagan, again on my right, just ahead of me, Chief Executive Officer at Great Lakes Energy. Not forgetting Taiwo Ajeniji, Senior Director, Investments Group, Africa Finance Corporation. Many thanks for making time, gentlemen. There is a statistic that is synonymous with energy in the continent. It is the statistic that 635 Africans have no access to energy, let alone electricity. What are we doing to actually change this narrative? I want to start with you, Sam, being the one who is homegrown, and you are based in Rwanda. What is Rwanda doing differently to make sure that this statistic is actually changed?
Rwanda started a very aggressive electrification program. It started with the economic analysis of what it's going to take to electrify the rest of the country. We're currently at just over 20% of electrification. And they determined that a lot of the country is going to have to be electrified with off-grid solutions. And this is a problem that's common across sub-Saharan Africa, and it comes to the very high expense of distributing electricity. Copper wire is prohibitively expensive, and so many of the villages just do not have enough consumption to justify the millions of dollars that's required to take for the copper, to take the electricity there. And so that brings into the picture off-grid solutions. And in Rwanda, there are three main off-grid solutions that are going to be deployed. One, and the biggest one, is solar home solutions. The second one is mini hydro. And then third is mini grids that will be powered either by solar or hydro or combinations of both.
Right. Let me throw this to Dr. Kipyego Chilagat. First of all, COMESA has embarked on a very ambitious project for the Eastern Africa power pool, and we're looking at over 2,000 megawatts of electricity. Just give us a sense of where this is in the near term, let alone the midterm, when it comes to generating power and distributing it very evenly to the rest of the COMESA countries.
Yeah, I think each country in the COMESA region, as you rightly put it, has very ambitious plans of reaching out to the enriched people of our region. And what COMESA is doing is working on power pooling to ensure that power distribution is made possible. And this is through, for example, one of our flagship projects, the Zambia-Tanzania-Kenya interconnector, is to envision a situation where we can be able to transport power from the eastern part of Africa to the southern part, or vice versa, or even linking up to the resources that are available in the DRC. So what is happening then is each COMESA country is ambitiously looking at generation, and we are also trying to help in terms of distribution, in terms of interconnecting the entire region. And what we are seeing is at least the support and prominence that is given by some of our development partners. And virtually all the countries of our region are doing something towards this ambitious goal of not only generating but also distributing the power across the borders. This was never the case before because each country was sort of looking at its own. But now I think there's a realization that you have to go beyond the borders to be able to make sense of the power that is available within you and taking it to those other areas which are not which are not connected.
Right. I want to bring in the two gentlemen who are definitely going to make us get a sense of the money, at least the finances, Mr. Taiwo and Benjamin. Just give us a sense of how we can better de-risk Africa. Taiwo, I want to start with you because just leading up to this, he was going on about the power pool. And I understand West Africa, there have been a few power pools. Many haven't been very successful. But just give me a sense of financing. How do we better de-risk the continent in order to make this electrification curse something of the past?
Well, obviously, doing projects is all about de-risking, making it worthwhile for investors to come. When we talk about the significant investments that we need to make to bring power to that level that it will be available, maybe not to everybody, but at least to a majority of Africans, we are talking of several $100 billions. This is money that African governments don't have, and therefore the private sector has to play a very important role in that process. And that's what we are seeing over the last 10 years or so. Now, we are getting structures now that are making the private investors more comfortable to coming to invest in power in Africa. One, of course, the government is playing its part because in terms of economic management and providing the necessary environment, conducive environment for investment generally, particularly in infrastructure. Several African countries have made significant progress in that respect. So that in itself is encouraging investors to come in. And then we have also instruments that are addressing some of the challenges for investment in power. Of course, one of them is being able to generate enough revenues to pay either an equity investor or a debt investor. And we have several countries that are adjusting their tariff towards cost-reflective levels. We are not there yet, but we are going there. And you also need to use what I would call smart subsidies to try and bridge the gap between the amount of revenues that any particular power sector, power industry will require and what can immediately be made available through the tariffs. And you have several countries as well deploying what I would call smart subsidies just to bridge the gap and nurture the industry to full cost recovery. With respect to power pool, in West Africa, we do have the West African Power Pool. Yeah. And one of the things that the West African Power Pool is doing is actually developing their own power projects and make it regional. Actually, my institution, the African Finance Corporation, we are currently working with the West African Power Pool to develop 2 gas-fired power projects, one in the Republic of Benin for 450 megawatts, and one in Ghana also for 450 megawatts. So that's like 900 megawatts that we hope to develop. We have been commissioned by the West African Power Pool to develop, and we hope to reach close on this in the next 24 months and bring it on stream probably in the next 5-6 years.
Right, many thanks, Taiwo. We'll touch on the issue of subsidies. I know we've been going on about that for quite a long time. But Benjamin, again, risk, as a senior underwriter, you do understand risk very well. And what is the primary challenge that we are seeing right now, besides the conversation and the narrative of de-risking Africa? Where are we on that front?
Well, of course, one has to start by saying when you look at Africa, you should never think it's one plain, uniform continent. We have various challenges that exist in various economies and even in various regions. So when you talk about access to electricity, for example, you have an extreme of 85% in South Africa, and then you have maybe South Sudan at the other extreme, and then all the other countries in between, including Rwanda, which is probably at about 20-something%. The challenges are very many, and what the fundamental principle you have to remember in risk-taking or de-risking projects and indeed in de-risking anything is that you have to make sure that the risk is apportioned to the person best able to take it. So in the African scenario, there are very many countries where the utility doesn't have a track record. Maybe the balance sheet is not strong enough, so government support is very important. And in such countries, it's very important for the government to proactively take a role in protecting, in supporting rather the utility, so as to make any investor comfortable that there is adequate support for that utility, because on its own, it's not able to stand on its 2 feet. We were attending a conference this morning, and I talked about the fact that there are 2 aspects to risk as well. So there is policy risks that have to be de-risked, and there is financial risks that have to be de-risked. When you look at a country like Rwanda, a lot of work has been done, and it's obviously well known that the government has put in a very strong effort to provide an adequate, comfortable investment environment and to put policies in place. But there will still be investors who, when they come into a country, want the financial risks to be addressed. And as ATI, what we then do is we provide some form of insurance or guarantee mechanism in place. It's available in member countries where we will say, okay, for certain financial risks, including country risks, ATI will work as a partner to backstop those risks should they ever occur. Right. Having said that, there will always be risks that a private shareholder should take and should price for, but the government should also know that there are risks that the investors are counting on for them to take. And then for the gaps that exist, there will be insurers such as ourselves and other financial institutions that can come up with either hedging products for forex, investment insurance for some of the country risks, and commercial insurance for some of the off-takers or some of the buyers.
Without a doubt, a little quid pro quo there. I want to bring in Dr. Kipyego. Do you get a sense that we are approaching that position whereby like the EU, where it can actually take on some of the risk as a regional body? Maybe this is the time where we see the likes of COMESA, which is a stronghold when it comes to integration, for COMESA to actually come to the front and say, guess what, we can take on this much risk, and the insurer or the government can take on the other.
I mean, for your information, ATI is a COMESA institution. And we have also another one, SEBRI. Well, the beauty about COMESA is that it takes the region fully and then tries to address some of the constraints by forming formidable institutions. When it comes to financing, we have the PTA Bank, which is undertaking major infrastructure financing that is going on. And of course, they link up with the African Development Bank. But in this particular area of risk, definitely what ATI is doing, starting within a very short period of time, being able to undertake and underwrite some of the major risks that are involved in some of the major infrastructure projects. So, and I think like what he has said, ATI, which was only perhaps covering the COMESA region, is now able to perhaps even move on to West Africa. Yeah. So we are also seeing some of the COMESA institutions really going beyond the COMESA region and even going beyond the membership of COMESA in terms of being able to underwrite some of the risks that are involved.
Right.
And we have other insurance-related institutions such as the Yellow Card, which is an enabler in ensuring that there is movement within the region.
Taiwo, let's talk investment. So I think the most disturbing thing is the debt and the rate at which our debt is actually rising. As early as the year 2000, well, we were written off, at least many of the countries in Sub-Saharan Africa. As we speak now, debt in Ghana is north of 70%. Kenya is around 50.3%. Rwanda is also rising, just barely below 33%. Uganda is another story. Is this something that we can actually live with and just accept that there is a cost to us financing the infrastructure, let alone the power projects?
Well, we have to accept that there will be a cost to financing infrastructure projects. Actually, the best way for any country to address their debt problem is to grow, is to have economic growth. And you cannot really have economic growth without developing your infrastructure. So, it makes sense for countries to have some rise in their debt profile as long as the fund is being taken to invest in economic infrastructure. Because ultimately, the only way to get your debt under control is to have economic growth. If you don't have economic growth, then your debt as a proportion of your GDP will keep rising, and at some point it becomes unsustainable. So if countries are procuring debt in order to invest in infrastructure, I think that's a good thing. Of course, there will always be limits, but at least that's a good use of debt than taking debt for consumption. Obviously, part of the problem has been the collapse in commodities in the last 3-4 years, because most African countries are largely dependent on commodities, on natural commodities. So the collapse in the price of oil for countries like Nigeria, Angola, etc. The collapse in the price of copper for countries like Zambia, and so on. And even agricultural commodities, tea and coffee, etc., has exacerbated the debt problem, obviously. But it is accepted by most economists that it's a reasonable thing if you take on some debt to invest in infrastructure services. And of course, it also has a reflating effect on the economy, because when you also spend, you reflate the economy as well.
I can see how Sam is looking very keenly at you when you mentioned the debt vis-a-vis economic growth. But Sam, I want to bring you into the picture here. When we talk about much of Sub-Saharan Africa, hydroelectricity is still very prominent, and you being on the front of solar, what are some of the challenges that you are actually looking at as selling the dream of solar? Yet, for the longest time, much of the people, at least in the rural areas, believed that solar is relatively more expensive, and the sunk cost was something they just could not bear.
This is changing a lot now. Two major trends have come in to start changing that dynamic. One of them is the cost of solar has dropped significantly. Unfortunately, it's only the cost of solar panels that have been dropping. The cost of wires and batteries and the other components required to make solar work have largely remained the same. But the cost of panels have really dropped astronomically over the past 6 years or so. And what was your other question, Arnold?
Moving forward, how do you, besides the challenges, how do you actually sell the solar dream?
A big part is de-risking it for the consumer, and that comes in sort of two packages. One is making it more affordable, and whereby the consumer pays bit by bit as they use it. And while the consumer is paying, the risk is on the supplier. And so that makes it easier for the consumer to get into it, and you can match the payments largely to the affordability of the user. And so if you're talking about rural homes, we're talking about people who can spend anywhere from $2 and $20 a month, so you can match the payments to that amount. There's the other side of that you can do for industry in on-grid areas, what we call captive solar power. And there, affordability is less of a problem, and risk is a bigger problem. You're talking industries that they're profitable, they've been operating for many years, they have a track record, they have capital, and they have access to debt financing, but they don't know solar. They know manufacturing or whatever it is they do, and so they don't want to take a risk on whether they've estimated the yield out of the day correctly or whether they've chosen the right inverter technology. And so what really opens the door there is our project developers coming in and saying, listen, we understand the solar power. We can sell it to you over the course of 15 or 20 years via a PPA agreement, and the developer makes their money like that. The client is able to reduce their energy loads by using solar during the daytime of their operation, and is able to do so without taking on that risk. And so that is emerging finance models coupled with the enormous drop in PV prices are enabling these new trends.
Benjamin, Sam just pointed at something very interesting here, whereby the people actually from your end are the ones who have to do all this explaining and break down. I don't want to say technocrats, but break down that this is actually something that can work, and maybe you do take on this from your end. Is this the future of financing much of the energy projects on Sub-Saharan Africa?
I would say yes and no. The reality is there are parts of Africa where an on-grid solution will just never be feasible in the short term. I mean, we have losses on our distribution and transmission lines, and we probably have infrastructure that needs to be strengthened just to serve existing and potentially close areas. But as I think some had mentioned, for example, in Rwanda, they've done a study and found out that there are areas where the off-grid solution will have to be the main solution. But at the end of the day, we can never achieve pure the growth that we need to, the development that we need to with off-grid solutions. So on-grid power will always be necessary. There will always be development in, for example, urbanized areas, and for those, there will always be on-grid solutions. So what we see is, in order to really meet the gap that exists, we have to be proactive and look at both on-grid and off-grid solutions. So they all have a role to play.
Right. A very interesting point I want to bring forth is the currencies. Now, this definitely has to go to Dr. and Taiwo, because yes, the Naira is doing very terribly, at least compared to 2 years ago. And Southern Africa, we're seeing some bad performers. Of course, Angola, they're struggling. Zambia, which has been hit by the slump in copper intake from China. But what impact are we seeing on depreciation of currencies, on interests that have to be paid back to debt vis-a-vis the electrification?
Of course, definitely the cost of currency and the commodity prices falling has had a really negative impact to a number of economies. In Zambia, for example, where copper has a very long time been the main source of income for the country, is seeing that they have to look for other sources of income. And I think what countries need to do then is to diversify into agriculture. Definitely, because a country like Zambia has huge potential in terms of food production. Yeah. And I think that is one way in which we can move away from commodity dependency. And I believe that this will also bring stability, because in a situation where you have these vast agricultural lands, and now because of the slump in the commodity prices, you have people who are not employed, roaming around in towns and so on. Yet, on the other hand, the land is just there, waiting to be tilled, and of course the demand for food will always be there. Mm-hmm. So definitely, in COMESA, we've been trying to promote agriculture through the Comprehensive African Agricultural Development Program, CADAP. And in this, we have tried to encourage governments to move away, our governments to really think seriously about agriculture as a business and not really rely so much on commodities. Mm-hmm. And I think this also applies to oil-producing countries, where fortunately, of course, they have the land which they can produce the food, but they've been so dependent on this one commodity that they export.
The Dutch disease.
Yeah, and you'll find that what we are really doing is exploiting, sending away our raw materials to be processed in places like China and sold back to us. Yeah. And in the end, actually, we're exporting all the jobs over there and remaining with the poverty. So I think we really need to address that. And I think if we did, then even the issue of currency will be addressed. We are going to be taking a short break. You're still watching the East Africa Focus debate on energy right here in Kigali, Rwanda, with my esteemed panel of analysts. Right after the break, we will be talking subsidies, PPP, of course, private-public partnerships, political will, which is very important, and not forgetting government reform. Right here in CNBC Africa, First in Business, Worldwide.
Welcome back to this focus panel discussion on energy across sub-Saharan Africa, and focusing more on East Africa, trying to demystify the shortfalls when it comes to electrifying East Africa. Esteemed panel of analysts, we do have Ambassador Dr. Kipyego Cheluget from COMESA on my left, right next to him, Benjamin Mugisha, underwriter at African Trade Insurance Agency. I'm not forgetting Sam Dargan, the Chief Executive Officer at Great Lakes Energy, and last but not least, Taiwo Ajeniji, the Senior Director Investments Group at Africa Finance Corporation. Many thanks for joining us, gentlemen. Let's move the conversation on to subsidies. We did touch this and now, Sam, you did hint at subsidies being very different, but I want to bring Benjamin into this. As an underwriter and in your line of work, what does this mean for risk, let alone many of these companies that are looking to actually finance? What does it mean when tariffs and subsidies meet in the middle ground?
Thank you. I think for us, we first of all look at the issue of sustainability. So we ask ourselves, if you are subsidizing a commodity or subsidizing a service, to what extent will you be able to sustain that? On one hand, it's probably driven by competitive, the need to be competitive. So there is an opportunity to invest in several territories, and one of the reasons one may prefer one over the other is the amount of subsidy available, but we don't feel it's sustainable. What we have seen, for example, in Uganda with Get Fit is there was a deliberate move to actually incorporate a subsidy in the energy sector, but with a view that once investors were aware of the track record of the whole program and were comfortable with the risk, they would probably then take a view on how they price the transaction or the projects that they do. Because remember, one of the challenges we have here is the expensiveness of the cost components that we have. So on one hand, financing is available, but some of it might not be affordable. Most African countries are net importers, so they're going to import all the components that are going to be part of the project, and they will be at a cost that, maybe they are landlocked, maybe there's a distance, maybe there are inefficiencies. So and they'll have to then also take a return on the investment, and that return is a significant cost. If it's equity, the equity IRR might be higher if they look at a particular economy and think they need to get sufficient return, and the same with interest rate. So maybe part of the solution is to have a track record and to have investors' confidence increased so that when they look at a return, it's more realistic because the risk is not as high. And then on the other side, to definitely look at how you can gradually eliminate the subsidy by adjusting to have a cost-reflective tariff and cost reflection, at least cost absorption in the final tariff to the consumers.
Right. Sam, I'm going to put you on the spot here. With the solar energy getting a lot of favor with the renewable energies and the SDGs, do you get the sense that governments are about to be put on the spot to actually move towards subsidizing many of these solar projects?
It's a different type of subsidy than Benjamin was talking about, Arnold. Benjamin is talking about subsidies of tariffs, and the subsidies most relevant for solar in sub-Saharan Africa today relate to electrifying the population that's not yet electrified. And there's a capital cost required of the company that provides that. And the economics of these rural households, the majority of them, or a significant amount of them, are unable to afford the monthly fees that they would have to repay to the private companies supplying the solar power system. So some subsidies are required. And this is not just in sub-Saharan Africa. All rural electrification programs in history have required some subsidies from central government. The U.S. Rural electrification program being one very well-known case. And that was done largely with wires and distribution systems, but the point was still the same. The rural households and rural farms that were being connected did not have the economic power at that time to be able to repay the capital cost of that. So the reason solar is on the spot for subsidies is because solar's ability to be put anywhere and work predictably anywhere. So solar is becoming the major tool for electrifying the households and communities that are beyond the economic reach of the grid. And in a lot of cases, especially for the poor homes, that solar will require some sort of subsidy from either development partners or central government.
Right. Dr. Kipyego, I was at the IMF meetings just earlier this month, and much of the conversation was focusing on the fact that subsidies are now constituting close to 10% of some of these GDPs. And much of the West is very worried, especially finances. This is very scary to them, let alone the cost of paying back. As COMESA, do you get the sense that moving forward, maybe in the midterm, might not be very close in the near term, but maybe in the midterm, are we about to see the ease of subsidies being harmonized across maybe all the member states?
Of course, COMESA has a mechanism for addressing all the economic related issues. We have meetings of central bank governors and ministers of finance who look at the region and try to harmonize their policies in such a way that impact on the entire population is not devastating. So in this regard, on a very annual basis, COMESA reviews the economic situation of the region. But when it comes to the issue of subsidies in the power sector, what we've done is try to create an environment that is attractive for investment. So in this case then we are trying to have the feed-in tariffs that are harmonized and are attractive to the investors. And I think in this case then some countries that still offer subsidies in the power sector may have to try to relook and see whether there could be a balance in moving forward in order to attract new investments in the power sector. So we have countries that are doing well, I think, in this direction. For example, in Kenya, I think there's a standardized PPA now with the tariff that is quite attractive for investment. And I know in other countries perhaps the tariffs are quite low in terms of, I'm told Zambia is probably as low as 4 US cents per kilowatt hour. But I think in places like Kenya you have 10 US cents per kilowatt hour. I'm told Rwanda is perhaps quite high. I'm told it's 16. So in this case then, through an association that we formed of power regulators, it's called RARESA, Regional Committee for Regulators in Eastern and Southern Africa, who meet regularly to look to view this. We try as much as possible then through those associations to address issues of having a standardized way of moving forward in the power sector and making it possible for new investments to come in, and ensuring that perhaps countries that perhaps still want to keep electricity quite low, obviously because of political reasons, and you cannot really blame them for that, because definitely a population that is used to a certain tariff, there'll be a shock if something drastic happens. But then again, the consequences of not doing anything is that there'll be no investment, and therefore you'll have blackouts every time. So moving forward, I see COMESA as a very useful institution in the sense that we're able to bring in all these, the ministries of energy, we bring in the governors of central banks and ministers of finance, and we engage our development partners to have policies that are favorable for new investment.
Right. Taiwo, I want to bring you in here. When it comes to renewables, to what extent are you under pressure to actually finance projects when it comes to the energy sector that are maybe going green, to say the least? Like Sam sitting next to you.
Well, renewables, I mean, is the flavor of the moment. we know. But two things, and we, for us, the key element for which project we finance is usually the sustainability of the project, the economic viability of that investment. We subscribe to the emphasis on renewables. We subscribe to it, but in a way, it's also a bit. It creates a higher hurdle for Africa compared to other developed countries, because if you look at most developed countries, you see that coal, for example, is still a significant part of their energy mix. And but in Africa, we had the recent COP21 conference and etc. It's almost becoming impossible to be able to finance a coal power project, even when that coal is natural to that particular country. But the good thing is the cost of renewables is coming down. As Sam said, solar power project is coming down, such that you don't have to have significant subsidies to make them work. The recent solar projects that the recent solar PPAs that were signed in Nigeria, for example, was at 11.5 cents per kilowatt hour, which is actually quite competitive, say, compared to gas, etc. So for us at AFC, we do renewable energy. We actually finance the first commercial wind project in Africa, which we did in Cape Verde. We are financing a couple of solar power projects in Nigeria. We are also looking at a hydro project in Côte d'Ivoire, and so on. So we have got to a stage where we have at least the industry has been able to make renewable energy, renewable projects also commercially viable, because the conventional wisdom previously was that you can only do renewable if you have subsidy. But I think on their own, they are now, economically and commercially viable, and that makes them good for investments. And we're actually putting quite a number of investments in them.
Sam, I want to bring you into this one. Statistically speaking, at least theoretically, Africa alone has 60 million terakilowatt hours of sunshine from electricity alone. This is annually. And what is actually stopping us from tapping into this gold mine that is right here on the continent?
It's a really good question. There are two major components. One is energy storage, and that's what makes as Taiwo was saying, for renewable energy projects on the grid, largely we do not need subsidies anymore, especially for solar. Solar is now cheaper than a lot of other forms of generation capacity. But when you talk about putting solar into a rural off-grid home, they need a battery, and that pushes the capital cost up, so that home does require a subsidy. So if you talk about the solar resource as a whole, the two major problems, distribution and energy storage. It's only making energy during the daytime. You've got your peak energy demand in the evening as everybody comes home from work and turns on the ovens and turns on the lights. And to store that energy, all of a sudden breaks the very elegant economics that solar is having today. And we have some exciting emerging technologies, but none of them are yet on the table such that they've proven that they're economically viable without subsidies. But over the next few years, we'll see. The next part is transmission and how it plays with the rest of the distribution grid. So for example, if we add a lot of solar to the grid of one country, then we also need to add something else to make up for when the clouds pass over the solar arrays, and sometimes that can be coal, or that can be gas, or it could be heavy fuel oil, and these things have a cost. And so if a country needs to add, say, if they add 10 megawatts of solar, and then they need to balance that out with 10 megawatts of heavy fuel oil to address the peak times, then all of a sudden that cost of solar is, maybe it was 11 cents, but the cost of heavy fuel oil might be 50 cents, and all of a sudden it's no longer so economical. And so it's quite complex stuff, and you want to avoid getting into a position where you're saying this is the right way and trying to make it a moral issue. It's an economic and engineering challenge, and all these factors interplay with each other.
Benjamin, how do we better leverage the solar potential that is actually right here on the continent, at least from your perspective as an underwriter?
I think I totally agree with Sam. So if you look at the availability factor on solar, you're lucky if you get 6 hours. So that means if you, as he correctly says, if you look at your grid and you're thinking about grid stability and you're thinking about base load, solar will never be a base load. And you need to be able to have a proper mix which links into the availability of alternatives in order to have a curve where your demand at any one time is met with supply. Because if you have solar, the supply unfortunately will peak at the moment when demand is fairly stagnant or low, and then without the developments that we're expecting in the near future, or at least in the medium term on the storage side, you have the flip side. At the moment of peak demand, the solar, unfortunately, has gone to sleep. So it's that balance between the resource potential, which is obviously a peak point. Yeah. At one point, the solar resource is zero because the sun is on the other side of the continent, and the fact that the demand curve is different. So we will always have a mix of different energy sources in order to have a sustainable base load.
Dr. Kipyego, I want to bring you, just to follow up on Benjamin, is it possible for maybe COMESA or a regional body to actually have a mandate to member states, or member states actually have a mandate to COMESA and have this energy mix and maybe have protocols set in play where you say maybe 10% of your mix is going to come from renewables, maybe solar? Because if you look forward, it might be impossible for us to meet the SDGs with the renewable requirements if at all there is no hand from the likes of COMESA and regional bodies with so much power across the continent.
Definitely, COMESA can play a very big role in terms of creating a regulatory environment that is favorable to a good energy mix. And one of the things that I've just mentioned was the work that is being done by the regulators, the Association of the Regulators. And one of the other interesting aspects which is coming into play that might be very interesting in future is just recently, just this last week, the weekend, we concluded the Council of Ministers of what we call the tripartite. This is the EAC, SADC, and COMESA. Yeah. And if you look at the communique that came out of that meeting, infrastructure development is one of the key issues, and of course energy. So definitely we might even be able to go beyond COMESA and have a policy that will bind the tripartite countries, which is now slightly more than half of the continent, 650 million people, to be bound by certain protocols that would encourage this type of investment and have a healthy mix of energy and renewables.
Right.
So, yeah. So that is the direction we are moving on.
Interesting.
And I think to answer your question, yes, this is quite possible. I think there is definitely a great deal of sense and a great deal of ambition in our leadership to see that the future really lies on working together and looking at all the issues that affect our development and finding a solution that is acceptable to all of us.
Synergies, without a doubt. Taiwo, interesting number coming through from McKinsey and Company. By 2024, we're looking at close to 1.1 billion Africans, at least many of them. So more than 70% of those are going to be below the age of 35. And we're looking at industrializing the continent. But how do we industrialize without the power? What are you doing on your front to bring in that young population and actually move them towards this story of energy?
Well, energy is obviously becoming a very key aspect of economic development. I think people have come to it a bit late, but they have come to it now. Governments, industries, NGOs, etc. Now firmly believe that without having adequate energy, it's going to be able to propel, it's going to be difficult to propel economic development. And we are seeing significant resources going into developing energy projects and power projects. And the fact that we have also gotten the private sector to become much more involved in in developing power projects, I think that's a very significant development, because power used to be almost an exclusive preserve of governments, some 10, 15 years ago. Today, most power projects are actually being developed by the private sector. And what the government should do is continue to create the environment that will make the private sector thrive. I mean, if you look at my own institution, for example, where we are financing infrastructure, and only infrastructure being developed by the private sector. Such an institution some 10, 15 years ago would probably not have been able to survive, because you just don't have enough of such projects. But now we have a critical mass of projects, private sector projects in different areas of the energy value chain, from fuel supply to generation, and even in Nigeria, for example, the whole distribution system has been privatized, is in the hands of the private sector. So the unleashing the force of the private sector, bringing in, crowding in private investment, etc., will go a long way. Because, as I said, when we were having a chat before we came on air, we have to do something different from what we had been doing before. Because whatever it was, it hasn't really worked. Because the deficit seems to be growing rather than narrowing, rather than decreasing. But if you have this, collaboration between the public sector, being the enabler, providing the enabling environment, providing some support where that is required to leverage private sector resources, and then you have the private sector coming in with the resources, coming in with expertise, because it's not only financial resources. You also need a body of expertise, people that knows how to develop power projects and can actually drum power projects, because for power is a highly technical industry. So it's not just having the money, it's also having the expertise to be able to do it. But we are seeing the critical mass of all of that coming together. And I do hope that, say, over the next few years, we will see some significant improvement in availability of power.
Interesting. Sam, when we talk solar, at least for East Africa, we are seeing something that we didn't think was actually possible. If at all we mentioned the 70% mobile penetration of the mobile phones across the continent, East Africa with M-Copper and the others has managed to leverage the penetration of mobile phones on electrification. Solar, moving forward, do you see the two being inseparable?
No, I don't think so. I think it's not that they leverage the penetration of mobile phones. So they leverage the business models that mobile phones brought in, as well as the network coverage, so that they could cut off products remotely. Interestingly, mobile phones have been a key demand driver, right? Because people need to charge them. And so that has, I think, surprised the industry. Initially, a lot of people thought that lighting would be the sort of main demand driver, but it's actually mobile phone charging in rural areas. And your question is are they intertwined? I think it'd be nice if they were, but people's the innate human desire to communicate is much stronger than the innate human desire to have electric light. And so we're dealing with two different things. The mobile phone spread with this really strong pull from the market. We do not see that same pull for solar energy.
Right. I'm afraid, gentlemen, that is all the time that we did have. Just a few parting remarks from all of you just before we depart. Doctor, let me start with you.
Yes, perhaps I should have mentioned that in COMESA, we are also looking at partnering with other countries such as China, Norway, Sweden, the EU countries in terms of coming up with energy policies that will really help our region. So, for example, one of the most attractive things that we are looking at is, for example, partnering with China in terms of building off-grid hydropower plants. And my Secretary General right now is in China looking at this option, working together with the International Center for Small Hydropower, which is based in Hangzhou in China. And when you look at what China has done over the years and utilization of the hydropower as well as irrigation, you seem like you are able to kill one bird with one stone. Sorry, two birds with one stone, by on the one hand providing irrigation and providing electricity at the same time.
Right.
So this could be a very interesting model for us, and it's quite exciting that this is something, our initiative within the Secretariat, and I think our member countries probably will find it very interesting.
All right. Benjamin, over to you.
Thank you. So the African Trade Insurance Agency is a multilateral. It's an African institution that has African shareholders, including African governments, and the whole aim has always been to promote trade and investment in Africa. We look at the energy sector as key to the growth of the continent as a whole, and definitely to our member states. We have looked at project approach, so working with financial institutions, including our partners such as AFC, and also trying to get inclusion from the local domestic banks to participate, because that's another gap that is possible, possibly filled by participation. We obviously work with DFIs and with donors and multilaterals from all over the world within this sector. And we are now looking at program approaches, how we can help not just one project, but how we can help institutionally the whole energy sector in a country or in a region. Right. And we're doing that in partnership with some donors, and we will soon be coming, for example, into Rwanda to launch that particular product. Over the years that we've existed, which is about 16 years, we've seen tremendous growth in appetite for African risk, and we think we will continue to support the investments, the trade in Africa, which is our mandate, by de-risking the risks, increasing the confidence of the market in Africa as a prime destination for trade and investment.
Right. Sam, very briefly.
Various schools of thought on whether electrification in rural areas should be done with grid or solar, and what are the trade-offs. Really, I think it's not the relevant question. The relevant question is, what is the most economical means and technology to deliver the energy that the rural households need today? And today, those rural households do not consume much energy, and the most economical means on the table is off-grid solar power. When they start consuming more, once it might become economical to bring the grid to them, and it won't be a problem to do so. It'll be a question that we'll need to continue to assess every few years and adjust our methodology as we go.
All right. Taiwo?
Yeah. Well, as working in an institution that is devoted to power investments, among others, I think we are quite encouraged and happy that there seems to be a renewed emphasis for power investment, for improving power in Africa, and as much as possible reducing the current power deficit that we have in Africa. If there is one advice that I would give governments, utilities, and so on, is that they should pay as much attention to reducing the losses in their power system as they do in adding to their generation capacity. Because on the average, you have almost 30% loss in the system. So what it means is that if you develop a 600 megawatt power plant today, you are losing 200 megawatts of that just flowing through the system. So we can actually significantly increase availability of power, and therefore access to power, by making small investments in our networks to reduce both the technical as well as commercial losses. And I think that will also go a long way.
Many thanks, Taiwo. Not forgetting Ambassador Dr. Kipiego Chalagut, Assistant Secretary General at COMESA. Right on his left, Benjamin Mugisha, Senior Underwriter at African Trade Issuance Agency, Sam Dargan, Chief Executive Officer at Great Lakes Energy, and last but not least, Taiwo Ajit Niji, I hope I pronounced that right, Senior Director, Investment Group. Many thanks, gentlemen, for joining me. The conversation when it comes to energy, it's never-ending. Two important takeaways. A lot in the pipeline there from COMESA, but it shouldn't be about what should be going where, but rather, is it economically viable? That's where we'll leave it. Arnold Segawa is my name. The conversation continues on CNBC Africa First in Business Worldwide.